Welcome back to the special Earnings Central. Now, ICICI Bank's management, Sandeep Batra, Executive Director, and Anindya Banerjee, the CFO of the group, are addressing the media after announcing their earnings. Take a look.
9% year-on-year and 2.2% sequentially at March 31st, 2025. The retail loan portfolio grew by 8.9% year-on-year and 2% sequentially. Including non-fund outstanding, the retail loan portfolio was 43.8% of the total portfolio. The personal loan portfolio grew by 4.2% year-on-year and 0.6% sequentially. The credit card portfolio grew by 11.7% year-on-year and 0.9% sequentially. The business banking portfolio grew by 33.7% year-on-year and 6.2% sequentially. The rural portfolio grew by 5.1% year-on-year and declined by 1.5% sequentially. Growth in domestic corporate portfolio was 11.9% year-on-year and declined by 0.4% sequentially. 74.8% of the corporate loan portfolio was rated A- and above at March 31st. On technology, we continue to enhance our use of technology in our operations to provide simplified solutions to customers and making investments in our digital channels. We further expect to strengthen system resilience and simplify our processes. Moving to asset quality, net NPA ratio was 0.39% at March 31st, 2025, compared to 0.42% at December 31st, 2024, and 0.42% at March 31st, 2024. During Q4 2025, there were net additions to gross NPAs of 1,325 crore rupees. Gross NPA additions were 5,142 crore rupees in Q4 2025. Recoveries and upgrades of NPAs, excluding write-off and sale, were 3,817 crore rupees in Q4. Gross NPA written off were 2,118 crore rupees in the Q4 2025. There was a sale of NPAs of rupees 2,786 crores in the current quarter. The sale of NPA consists of 1,605 crore rupees of security receipts and 314 crore rupees in cash. The bank continues to hold 100% provisions against these security receipts. Provision coverage ratio on non-performing loans was 76.2% at March 31st, 2025. Total fund-based outstanding of all borrowers under resolutions as per various extent regulations declined to 1,956 crore rupees or 0.1% of total advances at March 31st, 2025 from 2,107 crore rupees at December 31st, 2024. The bank holds provisions amounting to 643 crore rupees against these borrowers under resolution as of March 31st, 2025. Loans and non-fund based outstanding to performing corporate borrowers rated double were 2,850 crore rupees at March 31st, 2025 compared to 2,193 crore rupees at December 31st, 2024. The total provisions during Q4 2025 were 891 crore rupees or about 5.1% of core operating profits and about 0.27% of average advances. The bank continues to hold contingency provisions of 13,100 crore rupees at March 31st. Going forward, we will continue to operate within our strategic framework while focusing on micro markets and ecosystems. The principles of fair to customer, fair to bank, one bank, one team, and return of capital will guide our operations. We focus on building a culture where every employee of the bank serves customers with humility and upholds values of brand ICICI. We aim to be a trusted financial service choice for our customers and deliver sustainable returns to our shareholders. With this, I conclude my remarks and would be happy to take questions. Thank you.
Thank you very much, sir. We will now begin the Q&A session with Mr. Batra and Mr. Banerjee. Anyone who wishes to ask a question may press star and one on their telephone. If you wish to remove yourself from the question queue, you may press star and two. Today's announcement is on the bank's financial performance. Hence, we would like to request you to ask questions related to that. Please write to the corporate communications team separately for any other queries. Due to time constraints, I request all of you to ask 2 questions at a time. If you have additional queries, you may join the queue again if time permits. Thank you. The first question is from the line of Vishwanath Nair from NDTV Profit. Please go ahead.
Good evening, Mr. Batra. Just wanted to get a sense on this net interest margin number, the sudden jump, 4.41%, what is contributing to this? And the second one, you talked about an uncertain global environment. Looking at your corporate portfolio, is there anything that you're looking at doing specifically at the bank which may protect the book against any undue volatility?
No, thank you, Vishwanath. As you're aware, the net interest margin was 4.41% in this quarter compared to about 4.25% in the previous quarter. The movement in NIM from Q3 to Q4 was primarily due to impact of day count, which we had in a way highlighted earlier, CRR reduction in Q3 and some interest on tax refunds. And of course, this was partly offset by repo rate and increase in cost of funds. So that's...
Sorry to interrupt you. Vishwanath, can you please mute your line from your side?
Sure.
Thank you. Sir, go ahead.
Sorry, I answered I answered that part. And from our overall long-term perspective, I think if you recall, NIM was around 4% prior to commencement of rate cycle in FY22. And with increase in repo rates, the NIM movement to the level, we had moved it about 4.5% over the last 2 years before it has declined to about 4.3% during the current year. In the near term, I think we will follow by and large what's happening in the banking system, and these margins would be impacted by repo rate cuts, and we do expect more repo rates to happen. And as you are aware, the deposits reprice happen with a lag. So we will continue to look at various ways, maximize opportunities to increase our risk-calibrated profits on a 360 basis. To your second questions around the volatile environment, specifically in the context of the book that we have built, I think we are very confident of the quality of the book that we have built. Of course, we will continue to watch the portfolio very carefully, but we will see how it goes. There could be opportunities also during this period. But our approach has always been to maintain a risk-calibrated growth and be focused on our return of capital principle, and that continues to be the same.
All right, so that was the management of ICICI Bank on their fourth quarter numbers. On that note, we're going to have to wrap up this special edition of Earnings Central. Stay with us. More will come up after the short break.